Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here. Been doing this for over 20 years, since 2003, for individual traders and professional institutions. All right guys, I'm going to give you an update on the market since our last video recording. So let me go ahead and get our standard newsletter recorder started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, April 26th newsletter. Tonight's newsletter, as you can see, divided into 8 major sections. By the way, guys, I had something that I had to take care of after the market, so the newsletter is coming out a little later this evening than I normally put it out. Hopefully you have time to review it tonight, or you can review it on Thursday morning. But anyway, general theme as we always keep. First thing we're gonna discuss is the trading algorithms. We had one of the systems take a trade today, and couple of the systems scaled out. We'll also go over the general market, give you an update on that. Quite honestly, Steve and I have called this pretty good. If you recall, over a week ago, Steve and I were warning about a wave, at least a wave 4 pullback of 100 or 120 points, and we've gotten that. So our potential wave 4 is played out. We warned you well over a week ago about that. So we'll go over that. We'll look at a few sector charts, commodities, bonds, currencies, precious metals, and trade ideas. I didn't add any new trade ideas tonight. I'm just going to go over some recent ones. And as you know, we're in earnings season. Microsoft had earnings yesterday. That stock was way up. Tonight we had Meta, which was up. And then tomorrow on Thursday, we have Amazon. Okay. Again, we're in the heart of earnings season. And again, a lot of these companies have or analysts have lowered earnings expectation. And so these companies are generally beating, but it's because they've lowered it. But again, we know overall the economy is slowing down a lot. We have a recession coming, a lot of issues. But anyway, let's go ahead and get started here. So first off, item number 2 below shows the 2-hour view of the S&P 500 cash. So if you recall, this mapping option, I talked about this on the weekend newsletter and video, and we talked about it early last week, the week before, weekend, Monday, Tuesday. We talked about this strong move up. We talked, back in early April, we talked about this initial move up being a wave 3, then that pullback being a wave 4, rallying up in a wave 5. And again, like I said, a week and a half ago, we talked about that we favored at least a pretty good pullback in a wave 4 of C. And so far, that's what's transpired. Now, it's possible it could turn into more, but we've expected that out of this wedge, out of this clear. We had MACD divergence. Everything was set up there for at least a decent pullback, and we've gotten it. All right, now the question is this wave 4 of C, and we go up again to a new high in a wave 5, and I don't mean a new all-time high, guys. We're in a bear market, just some sort of, taking out the February highs. We'll see. So far, the pullback off the highs at the lows, 120 points. The largest pullback in the uptrend that began in March was 130 points. So we haven't broken symmetry, but we're getting pretty close and needs to bounce. We do have a little RSI divergence. Futures are up a little bit tonight, especially on the Meta earnings. We'll see if that holds for tomorrow. But basically, again, this pattern we showed you, a week ago, 2 weeks ago, played out. And now we're watching to see if we can find some support in here. Okay. Now we'll go back to the market soon, but let's talk about the systems. So this large image here shows you the open systems. Okay. We've had some of these mechanical systems take trades. So first off, the breakout systems exited. The ES breakout exited yesterday, actually Monday, for a winning trade, albeit a slight winning trade. Yesterday, the SPY breakout exited, small loser. Okay, remember both of those breakout systems went long on March 31st, and we've also had these open short systems, the DVDS short on SPY and MES, and both of these took some partial profits today, as you can see. Very nice trades. They still have a half open position. They nicely hedged those longs on the SPY and ES breakout. Yesterday, we had the long trend pullback. Take a first entry long on SPY, a first entry long in ES, and today we had the QEBTS take a first entry. Okay. Next, image number 4. So this table here shows you the system. So first off, the breakout systems exited over the last couple days. We still have these open short positions that via the DVDS system on SPY, which has 2 entries, and on ES, a first entry. We took half off today for some nice profits. Yesterday, like I said, we had the trend pullback, take a first entry on SPY and ES, and today we had the QEBTS take a first entry on SPY. Now, I had some technical issues and I wasn't able to send this trade notification out until about an hour after the cash market closed, and the futures were already up after hours. So because of that, and we didn't get as good a prices as the system, theoretically, I elected to take just a half position. For the ETFs, I show $10,000, so I took $5,000. Okay. Again, you take whatever position size fits you, but that's what I did. If we get some weakness tomorrow, whatever, I'll probably go and add that second half of the position. Okay. I don't like buying the systems worse than their actual theoretical entry, so that's why I did a half position. But anyway, so that's what's going on here. Again, if you need a breakpoint trades, we have 21 reversion to mean systems. We have a breakout system, so that's 22 systems. And we have these trend following type systems, which are long as well. So all these nice automated systems, they kicked ass last year with the volatility. This year, they haven't had as many trades, the reversion to mean stuff, because of the volatility hasn't been as great, but they're starting to do a lot more trades here lately, so we'll see how these play out. Nice trades on these shorts here recently. Next, as I already discussed in the last couple of newsletters, I am going to add a new system to the mix, the VIX Bollinger Band system. It's when the VIX is outside its Bollinger Bands, closes back inside. You get your trade opportunities long and short. And the statistics are really good. So here's an example of some systems. This is on the SPY ETF and the VIX. Next. Image number 6 shows you the trade statistics for the system. You can see profit factor of 30. If you don't know what profit factor is, that's basically the gross profit divided by the gross loss. So, the settings I have here, this would have made, close to $10,000 and would have only lost $300. So that's why profit factor of 30 is really high. Generally, systems with a profit factor of 2 or 3 are pretty good, are considered good. 93.25% winning trades, decent profit curve. Next, let's go and move back to the general market. So image number 7, this shows you the index sector table, what transpired today and this week. So you can see the indexes closed mixed, with the Dow and S&P and Russell down, especially the Russell being hit more by the banks, and the NASDAQ area was up nicely. But everything's down for the week, as you can see. And for the market sectors, most of the sectors were down. There's 21 sectors we follow here. The sectors that were up are actually the tech area, the technology, semiconductor, and retail. Currencies, US dollar down 0.3% today, down about 0.2% for the week. Cryptocurrencies have been whippy. They had a huge rally yesterday. Remember, I showed a divergent low on Monday. Big rally yesterday and a big pullback, sell-off today. You can see this week they're mixed so far. Commodities mostly to the downside here. Agriculture slightly up, coffee up. But otherwise, all these commodities were down. Crude oil down 3.6%. The DBC, that's the index, down 1.5%. Natural gas down almost 5.5%. So a lot of losses here. Precious metals down as well, gold and silver and the stocks. That's fine. So far we've had a nice correction in that area, which I welcome. I'm looking to eventually go long again in the precious metals area because that area longer term I think is going to do very well. It got ahead of itself and it's having a healthy correction at the moment. As far as bonds, the 10-year was up 1% today, TLT down 1%. Next, item number 8 shows the economic news calendar. Like I said, we've had a lot of news this week, earnings. Tomorrow, the 27th, we have the GDP, initial jobless claims, pending home sales, natural gas inventories, and of course, a slew of earnings. Remember, Amazon reports tomorrow after hours, and again, there's a ton of stocks reporting, guys. Next, let's go and jump to the index charts. We'll look at the S&P first, our proxy. So here's the daily view of the S&P. As you know, we've been showing this large coil, and you can see we just had a little Pinocchio move out of this coil in this channel, and we've had a sharp pullback from there. We're now nearing the 50-day moving average. If we get a little weakness, let's say a reversal back down tomorrow, watch that 50-day moving average. Next, chart number 10, here's a half-day chart. Again, it basically shows you the same thing. Inverse head and shoulder pattern that we discussed in March obviously played out. We lost these trend line supports a few days back, and we've had a nice pullback since. Next, chart number 11, here's a daily view. Again, as you know, when I talked on Monday, we had all these doji indecision candlesticks right at this steep channel line. Well, price let loose hard in a big way on Tuesday and followed through today to the downside. Next, chart number 12, here's the daily KISS trend system. Like I said, these are long only. They're designed mainly to keep you long in bull market trends. I don't consider the indexes in bull markets. I consider some other things in bull markets, such as some of the commodities, some of the energy areas, but not the general market. But the S&P KISS system is long here. Still got a wide stop at the moment. It's right near its ATR now. You have the ribbons here pinching, so we'll see if we can get a reversal off that or not. Next, chart number 13, here's the 2-hour view. Again, this is the chart I was showing early last week. I discussed on the weekend. I discussed on Monday. Discussed this large fourth wave correction that we favored, and that is what we've had. The S&P is now down 120 points from the highs. Okay, the previous largest pullback from the March low was 130 points from that wave 2 of B. Again, this is one possible mapping wave count option. The issue with Elliott wave, is there's always multiple count options, but we at least favored some sort of wave 4 or whatever, some sort of pullback there, because we had a completed 5-wave move up here with divergences, and that has played out. Now we'll see if we can get a little bounce here. There is a little RSI divergence here. Another thing I talk about is, drawing these trend lines and the indicators. You could see the RSI 14 had a nice coil, and this busted down the other day. Next, chart number 14, here's a 60-minute view. Again, you can see this channel, which I talked about on the weekend, which we lost. We back tested and then went sideways. We lost that support. Pretty nice correction here. Now, in this time frame, we do have some RSI divergence building. If we go lower, there's a couple gaps here below. This, I forgot to mark a gap. There's a gap right in here that was essentially filled today. Okay, so we filled one of these gaps. I went ahead and drew that in. Here's that gap, open gap that was filled. But there are some other open gaps down here, and these gaps like to be filled, so I am mindful of that. If the market does want to dump more, that is potential targets, the downside. So we'll see. Next, image number 15. Here's a 60-minute view of SPY ETF. Same thing, obviously, is the cash. Again, you can see that gap that was filled today. There's the other gaps below, and the fibs, of course. 38% fib is down around that next gap. Next, chart number 16. Here's the 30-minute chart. Remember I talked about this on the weekend? We had this wedge. We broke it, back tested it perfectly. That was your objective short. And we went sideways. Then we busted this pattern to the downside starting on Tuesday. And, it's been a sharp sell off since, as you can see. We're in a steep channel here. Again, we filled this one gap. Little divergence here on the RSI. We'll see if we can get a bounce out of that. Next, chart 17. Here's a 15-minute view of the S&P that I showed on Monday. I talked about this tight coil, and it busted nicely to the downside, as you can see. Little MACD divergence here at the moment. Finally, chart 18. Here's a 10-minute view. Just updating you on Monday's newsletter. Remember, I favored this as an ABCDE coil with it complete, and this broke to the downside. So this was our favored move, and it played out. Next, chart 19. Here's the S&P 4 time frames we like to follow with the indicators. The daily up here, the upper left, we're right near that ATR. We'll see if we can hold that or not. Also, that support cycle, which is a resistance cycle, which is now potentially support since we broke above it. We lost the ATR on the other time frames. And remember, I talked about these cycles. We lost those early today. You can see the 78-minute there. Boom. Next. Chart 20, moving on to the triple Qs. Here's the triple Qs daily. We lost this little support trend line, back tested it today, the 9 EMA. You have the 50-day moving average down there if we want to get a further sell-off. Next, chart 21, here's the 2-hour time frame. And finally, chart 22, here's the KISS trend system. Again, no changes here, guys. Like I said, it's still long. Smart trailing stop still around that 303 area. We're still above the ATR. Moving average ribbons are starting to pinch a little bit. Next. Chart 23, here's the 4 time frames. Again, here's the daily, the upper left. Still above the ATR there. Still above that resistance cycle, which became support. We did break these support cycles today on the 130-minute, 78-minute, and that is concerning. Next, chart 24, here's IWM small caps. Again, we had a coil, broke to the downside. So playing out to the downside. This is also getting hurt, especially by the bank's financials. Next. Chart 25, here's the 2-hour view. Remember, I showed this nice coil. It was a clean coil, busted to the downside for an easy short. So there you go on the indexes, guys. Again, we'll see what happens tomorrow. Quick check on futures here. ES futures are up about 9 points. Next, moving on to some indicators. Chart 26, here's the VIX. Remember I talked about on Monday how the Bollinger Bands are starting to pinch together? That allowed the VIX to rally up a bit. Now it's nearing its upper Bollinger Bands. That action is also causing the lower Bollinger Bands to come up, which is important. Remember, they were buried. And next, chart 27, here's the 2-hour view of the VIX. Remember, on the weekend and Monday, I talked about this falling wedge. This played out for a nice pullback in the market. Look at that. Perfect move. And the wedge actually met one of the price targets via the symmetry, measuring that move back there via the dotted line, adding it to the bottom. That wedge played out nicely for a healthy market pullback. Next, chart 28, here's the S&P with the NIMO McClellan oscillator plotted as a histogram. And remember I talked about this. This went negative actually on Friday. So that was a sell signal. And again, it doesn't pick tops, but if you look in the past here, whenever this has went negative, that went negative on all those past sell-offs in the market. So this was a little warning. Okay, and you can see so far it's played out the last couple days. Next, chart 29, here's the PMO system. I talked about this. This actually went on a official sell signal yesterday when it closed below the 66% area, and today, of course, it dumped. Next, chart 30, here's the chart. This played out beautifully, gave us an early warning. This is the S&P large cap advanced decline to the small cap advanced decline, and you can see had this negative divergence between the two at the highs a couple week and a half ago. That played out for a pullback. That was a warning. Remember at the lows here in March and December and October, you had a nice positive divergence. That negative divergence was a good warning sign. Next, chart 31, here's the S&P versus the high yield corporate 60-minute chart. Remember we had this negative divergence back in mid-April, and this gave an early warning for the market. Next, chart 32, high yield corporate down today, a little close below the 20-day moving average. You have almost a little head and shoulder look to it here if it loses this. Let me show you via this 2-hour view. So chart 33, here's the 2-hour view. You can see this potential slanted head and shoulder pattern. If this were to play out, that would cause some weakness sell-off to the market. So keep an eye on this head and shoulder pattern on the high yield corporate. The market and high yield corporate tends to move together. Next, moving on, let's look at a few select sectors. Chart 34, here's XOK technology, a little bounce back today, not surprising. It was getting near this lower trend line of the wedge. Now we'll see if we can get another pop up here or not. Remember, it is heavily weighted. These three stocks make up over 50% of it. Apple, Microsoft are each 22%. Next, chart 35, semiconductors, on Monday, I said it was right at this uptrend channel. It obviously lost it yesterday. Today, an inside day black candle. Next, chart 36, financials, just beautiful. We had a 5-wave decline here, nice rally, but I said watch for this to sell off near that 200-day moving average, and that's exactly what happened. Next, chart 37, KRE, that's the regional banks. As you know, that area is the big problem area, and it broke to the downside. Kind of a 4th wave triangle, essentially. We do have some active divergence now here, but so far that broken trend line's acting as resistance. Next, chart 38, XLP, consumer staples. This area has been leading. It's finally pulling back a little bit with some divergence. This is something to watch. Money was rotating into here. Now we'll see if it rotates out a bit. Next, chart 39. Here's the S&P versus the XOP S&P ratio. As I commented on Monday, this was very concerning because this ratio was declining, and this moves with the S&P, as you can see. It's highly correlated. So this was given a warning, and indeed we got a sell-off in the S&P up here. Now it is outside its Bollinger Bands here, so maybe the ratio is set to bounce back a little bit. Next, chart 40, XOU utilities. So I talked about utilities on Monday. Well, what ended up happening is had a little Pinocchio false break there on Tuesday, and then boom, big sell-off today. So, it did not break out, it had a false break. Next, chart 41, Duke Energy again, is the various utility stocks that I put out, they have all pulled back. Again, that stuff kind of happens, guys. Next, chart 42, XLY, consumer discretionary. Remember I showed this as a tight coil on the weekend. It's broke down the last couple days. Next, chart 43, real estate. I showed this as a bearish diamond, and you can see indeed it is broken to the downside. By the way, these diamonds, guys, whenever the bottom apex or whatever is more to the left, or to the right, whatever apex is further to the right is generally the direction you favor to break. Because this bottom apex is closer to the right than the top one, it favored a downside break. If the top one apex had been closer to the right, then you would favor a bullish upside break. Next, chart 44, XLE Energy. This on Monday bounced off its 20-day moving average, but lost it. It's now back to its 50-day moving average. Hard for energy stocks to rally with crude oil selling off, etc. But the stocks are holding up very well considering what's happening with crude oil. Next, moving on to commodities, chart 45, DBC, the index. Boom, lost this broken downtrend line. So pretty healthy pullback there. Again, this is heavily weighted to energy, about 50% or more to energy. So whatever crude does, this tends to do. Next, chart 46, crude oil. So, as you can see, crude oil stalled right at that 200-day moving average and has had a big sell-off, and it lost its 50-day moving average today. One thing I didn't do, you could add fibs from that March low to the recent highs. It's probably just around the 50% fib now. Next, chart 47, Dr. Copper. It's been breaking down, as you can see. Indication of more of a slowing economy, recession coming. Next, chart 48, DBA, agriculture. This commodities held up much better. Broke out of this resistance, pulled back, held it as support. Next, chart 49, TLT, 20-year bonds. Rallied off that support, down today. Next, chart 50, 10-year treasury yield, weekly chart. So far this week, 10-year treasury yield's down about 3.9%. Next, chart 51, Bitcoin. So here's Bitcoin. This rising wedge that we had played out beautifully for a nice sell-off, the 50-day moving average, and it's rallied off the 50-day moving average. Now we'll see if we form a lower high here. Next, chart 52. Here's another view of Bitcoin, kind of in this expanding wedge. Next, chart 53. Here's Bitcoin on the 2-hour. So a lot of volatility. Remember in Monday's newsletter, I talked about this divergent low with the MACD, and this produced a powerful bounce. And then it came way down, sold off from 30,000 to 27,000, and then it's come back mostly. So very, very whippy here lately. Next, chart 54, Wolf, one of the crypto stocks that we've been trading. Nice pop today, but off the highs. Mare is my other favorite one. Next, chart 55, here's Mara. You can see it bounced off this, if you extend this trend line, well off the highs today, though. We'll see if it's up tomorrow with Bitcoin being up tonight. Next, chart 56, UUP, US dollar ETF, down today off the lows, still in this downtrend channel. Next, chart 57, here's the monthly view. Again, that fifth wave move that we put on the chart mid last year has been playing out. A lot of concerns out there about the dollar losing its dominance. I see a lot more acceleration of that and more countries starting to do it. Even friends potentially of the United States, such as Japan and France. And, I don't like to get political here, guys, but let's be honest. The administration we have, the incompetence of them is not giving him, that's not helping either. Next, moving to precious metals, chart 58, gold. This is the weekly view. Gold's holding up this week so far well. Still up about 0.3% for the week. Again, this is the bigger picture chart. Eventually, I do expect gold to break out of this to the upside, given what's going on in the backdrop of things. I think gold's going to have a great year. Next, chart 59, here's the daily view of gold. Again, it's having a nice pullback here, correction, which we wanted. Again, you essentially had a double top back here. But I do believe eventually this is going to rally to a new high. Right now, it's in this uptrend channel. 38% fibs down here at 1967. Next, chart 60, here's silver. It's also pulling back. This is a support zone at this point now. Next, chart 61, GDX. Nice correction here. It's had a hell of a run after the March lows. By the way, the KISS system, there's a stop right here, essentially hasn't been hit. It's getting close. Again, I welcome this correction. My thought overall is that maybe this is some sort of, ABC. This is an A down, gets a B, rally, then a C. Then you'd want to buy it. Okay, something like that. Next, chart 62, here's the 2-hour review. This little wedge Steve showed on Tuesday. It broke it, it's back testing it, so it could try to rally off this, or it could just crater. This would be an area for a stop if you're long. Right now, I'm just monitoring this area. All right, guys, following up with other trade ideas. Trevor 63, Microsoft, as you know, this had earnings and a big pop. Next, Trevor 64, Apple. Always got to keep an eye on Apple. Slight break of this uptrend channel here today. Apple, I don't think reports till May 4th, something like that. Not this week. Next, Trevor 65. Here's the 2 hour view, cleaner view of the channel. You broke it, back tested it with resistance there. Next, Trevor 66, Tesla. This is a 2 hour view. Poor Elon. Tesla, you know, we favored a downside break. It broke down, hit our symmetry target, and it continues lower. Next, Trevor 67, Rambus. This had a coil. It busted the downside for a short. Next, Trevor 68, AI. AI is the big rage, as you know. We had this as a short, and this played out nicely. It's now at its 200-day moving average. This is a good area to take profits, maybe even try a long if you think it's going to bounce again. Next, Trevor 69, McDonald's. This was a long idea of ours back in March. One hell of a runner. It's almost losing its 9 EMA. Loses this, pull back to the 20-day. Again, it's had a hell of a run. It was time to take some profits. Next, Trevor 70, APLS was one of the stars. This was a long idea I put out in March, cup and handle, and this has played out beautifully. Nice pullback today. Still hasn't lost the 9 EMA where my stop would be. Next, Trevor 71, CLX, Clorox. This is a long idea, a wedge that broke out. I talked about this on Monday in my education. Rising wedges are bearish, but as I state here, when a wedge has a slope that's too flattish like this, more often than not, it breaks to the upside. You generally need a steeper slope for a wedge. So that's one of those subjective things. And that's where still us humans are better at these patterns like this than something like a chat GTP that might not know a nuance like this. Okay. Next, Trevor 72, Nail. As you know, the home builders had a good rally. We had this as a long idea, but this is the ETF Nail. It's pulling back from that double top. Next, Trevor 73, BTAI was a long idea over this trend line. Stalled right at its 50-day moving average. That was a good area to take profits. Next, Trevor 74, ROIV. This is still a long idea. Hasn't broken this resistance. Still keeping it on here for now. Watch the 9 EMA, see if it can find support. If it can clear that 9, target would be 10. Next, Trevor 75, MCRB. Keeping this on the list is a long idea. It's forming this coil. I got lucky, had a buy limit down here. I got filled near the 6 area. So I own a little bit. It's very whippy in this channel. If it can bust this, target area is up around 750. All right, guys, that'll do it. We will see what happens tomorrow. Again, have a good evening, and hope you're playing some of these systems, and hope you're dealing with the inflation. Have a good evening. Take care.